Hey, what's up? It's Stephen A. Williams, president and founder of the creditrepairshop.com. I'm here to tell you that I'm here to give you good news. The recession made a turn. Uh, it's gonna seem like it's tough from when you hear stuff in the news. But if you just evaluate your own situation, evaluate what you're going through, and make your own adjustments, I'm telling you, you're gonna make it out of this. The long story short version of what you can do. Like if you walked into my office and you said, Steve, what can I do to make sure that, number one, my family and I make it through what's going on with these high prices, with inflation, with all of this stuff? What is the long story short, what can we do right now? And I would tell you and give you the same advice of what I've done and what I continue to do and how I've lived my life ever since 1999, really from 1994, which is to lower your debt. And I know that seems to be so, like, it's simply said, but it's hard to implement, is to lower your debt. Look at everything that you have, lay it out on the table, and you just say, this is where I need to cut, this is where I need to cut, this is where I need to cut. And then you look at what you need to focus on, which is going to be income and your credit. At that time, I did not really focus hard on my credit because I was, following, I'll throw his name out there. I was following Dave Ramsey, and he was like, credit score and this and that. And I think he does a lot of good things and gives people a lot of good advice. But I'm here to tell you that we live in a credit society. It's all the way around us. And I'm telling you, when I combined getting out of debt and having excellent credit, I'm talking about an 8, my credit scores across the board, 834 across the board. And when you put low debt, excellent credit, you're able to do things that people don't think that you're able to do, because you have a lot of control over your life. I'm talking about investments. I'm talking about doors opening, opening doors for your family, opportunities, all types of things. But that's later down the line. Right now, most of you that I'm speaking with are on the level of, hey, I'm struggling right now. What can I do? You need to pull out that piece of paper, and I want you to write it. I know we got computers and all this stuff now. You need to pull out your piece of paper, and you need to get all of your bills, which are not really bills. If you've been watching my videos, I call them household investments, because everything that you pay, light, gas, your car note, all of that stuff makes your life better, because you wouldn't have got it if you didn't think it was going to make your life better. So these are your household investments. Some of your investments are unnecessary investments that you made that you don't utilize to really make your life better. This just things that you bought, but you don't utilize them. So you need to cut those things, and then you need to concentrate on your credit, because I'm telling you, when this economy turns back around, then you're going to be out there trying to figure out, hey, I can take advantage of that opportunity, that opportunity, that opportunity. And the one thing that's going to hold you back is going to be your credit. And don't listen to people who say you could do all of this type of stuff without having good credit. Like, you can buy real estate with no money down. You can buy real estate with no credit. You can do all of these types of things. What they don't tell you is that, yeah, you can buy real estate with no money down, but there is money that's used in the process. It's somebody else's money. OPM, you heard that before? Other people's money. Yeah, you can buy real estate with no credit. Yes, but you're using someone else's credit, or you're using someone else's cash to buy the property. See, when they throw those types of things out there, it kind of goes over people's head, and they only focus on the word that was said was buy real estate with no money down, buy real estate with no credit or bad credit. But they're not thinking, hey, what's the flip side? What's the B side to that? Is that you got to find someone that will allow you to use their credit, or you got to find someone that allow you to use their cash. Well, I'm here to tell you, this is what usually happens. Unless you're a very good salesperson, the first thing investors are going to want to do is they're going to want to look at your idea, because ideas is money. So you can bring ideas without having good credit, without having money. That's because ideas, investors know ideas is money. But when they start to do the research on you and they say, well, this is the way you handle your money, investors start to back up, because they're like, if this is the way you're running your life, and the credit is a window into the way that you run your life financially, they're going to say, why should I give you the money? And even if you have bad credit and you went through something, and you're sitting there talking to the investor and saying, well, hey, I went through this and that, they're going to evaluate what you went through, and they're going to see, is that a financial situation, or was it something that was maybe like a medical disaster that happened, which can happen. So don't be fooled. Your credit is very important. So that's the long and short of what you got to do. And I'm sorry I threw in the real estate example, but I had to throw that in there because that's what's going to be one of the biggest opportunities that people are going to throw out there. You're going to hear all these commercials about buying real estate, buying foreclosures, doing this and that, because this is the cycle of what happens when the economy goes down. Now, from my indicators, from what I saw last week, and I was away for the majority of last week, and I wanted to make this video, but I just really unplugged and took time to just be really away from business 100%. But I peeked in on my stock portfolio, and when the earnings reports came out, my portfolio grew within 1 day or a day and a half over $10,000. And it kind of went back a little bit, but what the thing that is very important, because that helps all of us that has stock and put that money away to grow for a later date. That's great, but this is the indicator that I like, that I don't know why the stock market people, or the people that are in the know, why they don't really hone in on this thing here. One of the things that, like, when my wife and I were looking at taking our money out of the market, we were like, it's went all the way from here all the way down to here, and at some point, where is the bottom? Like, where will it be at the bottom? Because when you get to the bottom, it sits at the bottom for a while, but then if you believe that the market is fixed, if you believe that it's just a gambling game, whatever, I could tell you that when it hits the bottom, it only can go back up. And we don't know how far it can go back up. And from what I could see, from what I was reading, a lot of people were taking their money because they had to pay debts. They were scared, and they wanted to, they've got these lifestyles, and they're like, I need to get my money out of there. I need to get it out, and, so I can sustain the life that I have. Even people that were CEOs of these companies, they would put in tickets to buy to sell large portions of their stock. That's why it was like just going straight down. And then, but what I was looking at when I was comparing that for what was happening, and comparing where they losing business, because when the bottom line is going to be, are these companies losing business? And when I was looking at, they wasn't losing business. And when the earnings reports came out, they wasn't losing business. They were, either meeting their numbers or exceeding their numbers. And so what my wife and I determined was, let's sit. We believe the bottom we're at the bottom, and that maybe a year, maybe 2 years, it will just skyrocket up, because I believe that the economy is a circular economy. The housing crisis, same thing. I was speaking to a gentleman that's in Arizona, and he said that they used to have like 20 people go and see a house, and now they're down to like 5 or 6 people going to see a house to put in offers. And I was like, no matter how many offers you get, only one family is going to get that house. So is it really a crisis, or is it just the pool that go to look at that house shrunk down some? Because no matter if you got 50 people, 100 people, yeah, it's good for the buyer, for the seller, but think about it. Only one person is going to buy. And the thing that he did not say, which was something that was said back in 2008, was that people were buying those houses. He did not say that. He said that it was just a lower amount of people going to see the house, but people were actually buying the houses. So that, take note of that, because there is I forget the gentleman's name, but I was listening to a radio show while I was on my way back, and he had stated that the generation, I think it was Generation Y, whatever the youngest generation that we have now, Z, Y, or Z, whichever one, they are moving out from their parents. They did do it at a later age, but they're buying houses. They're buying cars. They're becoming more independent. It was just like a wave that happened later. And I attribute that to people like us that did well, and we wanted to give our kids everything, and we kind of spoiled them, and we kind of delayed their acceptance of being a full-fledged adult. That was something that we did. You've probably done that. So they're coming of age, they're buying houses. You know, for my daughter and son-in-law, they built a new house, so they were in that pool of people who bought new builds. And then they were also in the pool of sellers where they put their house for sale. They had about 7 or 8 people come through, and they actually had someone put it in offer. And you can't come to these houses without being pre-qualified now. Put in an offer for the price that they wanted and sold that quick. And they actually, from what they bought the house for, I think it was in 2014 or 15, what they bought the house for, they sold the house for about 80%. They made an 80% profit in the with the property. So there's money out there. It's just in different areas. Now we are going through groceries, gas, electric. We're going through inflation. We're going to go through inflation, and this is something that has happened with our country over time. This is not the worst inflation that we've ever had. It's the worst inflation that we've had in 30, 40 years. Listen to that. Don't just listen to the word inflation. Listen to what they said 30, 40 years ago. How did people deal with it 30, 40 years ago? The opportunities now are way better than when we had the inflation back in the early 80s. Way better. Way better. But what you do when there's an inflationary period is you pull down, that's the debt side. You gotta lower your debt. The things that you've purchased, stuff that you spent your money on that you didn't utilize, those household investments that make you feel good, lower those, the ones that you don't utilize. You will see that you can lower those and you will still enjoy life. You will still be able to buy things. You'll still be able to do things, but you will not waste your money on things that you don't utilize. And the great thing about it is that once all of that is done, this is where I saw so much benefit from when my wife and I did this, is that when the times got better, our debt was low. We had saved from the money that we used to spend on stuff because we had did that during that contraction period. And then when we made more money, we had more money to enjoy doing the things that we wanted to do. And that it equaled out to be more savings because you're making that internal habit of not just blowing your money. I'm telling you, this will work. Like if I could make, and I do have a program on it, If you go and get my membership program, you will see that I do have a program on showing you what my wife and I did on how to get out of debt. Now, interest rates. Let me speak a little bit on interest rates. Interest rates are going to go up, and this is like feeding the money, people who lend money. This is feeding the people who lend money. For a period of time, we had went through very low interest rates. And then now the interest rates are creeping up, and they're saying that they're doing it to get a hold on inflation. Yeah, they do play a part with each other. But I believe also that this also plays a part with another segment. You have individuals who have bonds. You have individuals who loan money, and people who are trying to retire, and they're trying to figure out where they can get more interest on the money that they extend out there, because the stock market is low. There's an old saying: interest rates are high, stocks will die. Interest rates are low, stocks will grow. So the money did not disappear. The money just shifted. You're hearing a lot of commercials about get these real estate assets, get in the oil, get in all of these types of things. You're hearing all of that. They're trying to shift it over because you can get higher returns on your investments right there. But let's just look at it this way. You're not that type of investor. You don't have that type of money. So what do? You do what I just told you to do, because all they did is they just veered it over to another side of the economy, to another segment, and it's going to come back. So even if you lower your expenses and you're looking at buying a home and the interest rates are high, what do you think the commercials are going to be a year or two from now? What will be the commercials? When they lower the interest rates, the Fed lower the interest rates, what do you think the commercials, the overwhelming commercials that are going to be out there? It's going to be refinance commercials. So you're going to have a 5 or 4.5% interest rate, 5.5, 5.6 or a 6% interest rate, depending on where you got your loan from. And then you're going to have these commercials that are going to come out, and then the interest rates are going to be in the 4s, they're going to be in the 3s, they're going to go all the way, 3.5. I think the lowest that I've seen, which was one that I had got for my home, was 3.75% interest. And I remember in the mail, my own mortgage lender that was sending the advertisements to me to refinance, and they gave up. Like, someone must have been looking and were like, why would he refinance when he has 3.75% on his loan? Why would he refinance? At that time it was like 4.25 or 4.5. Like, why would he do that? He got lower than what we're offering. They shifted it and just started sending letters saying, you have 250,000 in equity. Why don't you, you can pull out some of that money. They started sending me those type of advertisements. So remember, it's just moving in the segments. Money does not disappear. Now, once you get that under control, you get your income under control. If you got to move to a better job income-wise, don't just move to a job for the income. Move to the job to have a better environment, better income. Like, all of that needs to be in your package, because you could be getting yourself into a situation that's like hell on earth when you move over into that. So get the income right. Get the debt, pull down that debt down, and then look at the opportunities that are available, and look at true opportunities, and also make sure that you work on that credit, and you're going to be in a better place. All right, thank you for your time. This is Stephen A. Williams, president and founder of thecreditrepairshop.com. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, so you can see my 8-point validation process, my 2-phase settlement process. That is the way that we repair credit, using that formula. If you need your credit reports and scores, go to the website your3scores.com. You get your TransUnion, Equifax, Experian reports. If you have debt collectors coming after you, grab my 3-pack of letters, my cease and desist collection activities letter, debt validation letter, and my cease and desist, debt validation, and statute of limitations letter. Had a brain tease right there. All right. Thank you for your time. Make sure you subscribe to the channel. Make sure you post your questions and comments. I will be in there answering them. Thank you.